Okay, and we're rolling as okay. Welcome everyone. Good morning, good afternoon, good evening, depending on where in the world you're calling in from. This is the pilot episode of the cryptocurrency trading show. Conversations and insights from the crypto world and Wall Street, and it's presented by Lighthouse Partners. So I'm your host, Pete Harris, and I want to thank everyone again for joining us for the pilot show, which has a theme this time of bringing Bitcoin to Wall Street. Now, before I kick off with the show proper, just a couple of housekeeping items. The show should be about 45 minutes today, might run a few minutes longer depending on the questions, etc. We're keen to get your engagement in the show. There's a chat box on your screen in the bottom left. If you type in there, everyone sees what you type, so keep it clean, but we'd love to hear your comments and your questions and remarks. We'll have a segment later in the show where we'll look at those and try to address some of those. If you've got feedback specifically for a specific presenter, then use that box as well. And we'll also have some other mechanisms that you can reach out to them as well after the show. There will be a replay, maybe an encore presentation, as I think they're called in the TV world, of this webinar, which will be posted on the Crypto Markets and Technology website, hopefully in the next 24 hours. So that's the housekeeping stuff out of the way, and I think we can now get on with the show proper. Just going to start with a couple of quick comments about the topic, bringing Bitcoin to Wall Street. Firstly, I think, from my point of view, trading and investment in Bitcoin and cryptocurrencies at a professional level is still in its really early days. It's really just begun. We'll hear from the presenters later to get their opinions. But there is, in my view, real momentum. It's accelerating. It looks like things are happening. Just one sort of data point in that, the interest is increasing. There was on Monday, there was a conference held by Bloomberg on the subject of Bitcoin, held in New York City, and I think a couple of hundred people showed up for that. So it really does show there's a lot of real interest in this topic. Just to talk a bit about what's going to be going on with the show today. We'll begin with a short discussion of some news items that get you sort of in the mood, if you like, for what's going on. Then there'll be the feature panel where there'll be three participants discussing various aspects of bringing Bitcoin to Wall Street. And then we'll have time for your comments and questions and debate. With that in mind, we want to jump straight in to the news discussion. I'm here joined by Ron Quaranta. Just going to give a 1-minute intro to me. My name is Pete Harris. My company is called Lighthouse Partners. It's a consulting and publishing company. I'm very much engaged these days in Bitcoin and related technologies, and the Crypto Markets and Technology website is my first publishing venture in this space. Very much covers the institutional trading of Bitcoin. So Bitcoin comes to Wall Street, if you like. And I'm here with Ron Quaranta. Ron, who are you?
I'm doing well. Good morning, everyone. So Ron Quaranta here. I'm currently Chief Executive Officer of a company called Digital Currency Labs. Digital Currency Labs is a financial technology and strategic advisory firm specifically targeted to help what I call bridge the gap between Wall Street and the world of virtual currencies. It's the idea of connecting existing financial services firms, both from a strategic advisory perspective, but also from a technology perspective with this the growing marketplace of digital currencies and integrating that into their wider workflow for the benefits of their customers. I've been in financial services and financial technology for just under 25 years. Alternatively, I started my career at various brokers as well as hedge funds. I spent a good chunk of my career at Thomson Reuters, the global news and information provider, where I ended my tenure there as the global head of trading analytics.
Great. So as you heard, Ron is, if you like, a person who spent a lot of time in what I call the traditional mainstream financial markets and is now very much engaged in the crypto markets. So I think he'll be a great person to have with us today. And I'm going to start by just trying to chat with Ron about a couple of pretty recent news items. I've covered both of these on the crypto markets and technology. Coinsetter. Last week, Coinsetter, which is an exchange, a Bitcoin exchange in New York City, came out with a mechanism whereby they are planning to offer, I think, 10% of the equity in their company to incentivize market makers on their exchange, which is an interesting approach. Ron, what do you make of that? Is that clever? Is that a great idea? Is that desperation?
Yeah, it doesn't strike me as desperation particularly. I know Jaron and some of the team over at Coinsetter are very smart folks. I think it highlights the challenge from some of the exchanges in the Bitcoin space to get market maker engagement. I think at some level offering equity and allowing them to be partners in the progression of Bitcoin liquidity development is a smart thing. I obviously haven't spoken to Jaron recently. They can't publicly talk about some of the numbers, but the uptake and interest seems to be strong. And I think without some level of this incentive at this point, that challenge remains. So I don't take it as a desperation move. I take it as a reasonably smart approach to partnering with market makers. Whether that use case proves out is something that will take a bit of time to see.
Yeah. What struck me, a couple of things struck me about it was in the mainstream financial world, you've had a number of examples of market to
Pete, I'm sorry, I think you're cutting out a little bit.
Hi, and you're hearing me fine now? Good. Maybe I was just speaking too fast. But a couple of things that strike me was in the mainstream financial markets, quite a number of past examples of trading firms, investment banks getting together to build trading systems, maybe in the bond space or corporate bond space. So I think there's, a model here that's kind of being followed by Coinsetter, getting some real skin in the game, buy-in from your major participants. And the other thing,
and it's precedent for this.
Carry on, Ron.
Yeah, I'm sorry. So there's precedent for this, right? Historically, for example, TradeWeb, that kind of consortium approach, I suspect that Jaron is learning the lessons of history from the financial markets. We'll see.
Okay. And the other, just very brief item I thought was interesting was apparently this if you like, being able to take part in this equity requires the market participants, the market makers, to use Coinsetter's Fix API, which I thought was, an interesting kind of approach. Understanding about. I did actually ask, put in a question to CoinSetter's PR company about it. Who didn't get back to me, so maybe they couldn't figure out either.
I think the ability to, I think CoinSetter was one of the first that approached the institutional market, talking about being able to trade Bitcoin and being able to integrate the workflow of financial firms via FIX. I think they were one of the first to speak about that. I know, I believe Bobby can elaborate on this later, but itBit certainly does as well. I think it's a prerequisite in many regards. The key here, Pete, is integration in the way that firms currently operate in the financial marketplaces. Without that, you tend to try to push firms to do something differently, and it makes the economics of that difficult.
Yeah. Okay. Just struck me as an interesting add-on to that announcement. So let's move on with the next news item. One from you, Ron. I think you've been looking at crypto markets technology and came up with a news item you wanted to chat about too.
I did. I actually want to chat about something you mentioned earlier. I happened to be in attendance at the Bloomberg Bitcoin conference on Monday, which, despite the pouring rain in New York City, was really well attended. The news item on my plate today is comment by CFTC Commissioner Mark Wiegand, where he basically stated publicly that the CFTC has the authority to act where it believes there is manipulation of the price of Bitcoin. I think what's most interesting about this statement is a couple of things. One was, for those who are in the financial market and the financial services business, that wasn't particularly surprising. I mean, you could see some of the Bitcoin enthusiasts from the early days that are more technologists, for example, that were a bit concerned. They hear regulation and they suspect not good things. I think it's a net negative for Bitcoin. I think Commissioner Wiegand's statement actually resonated with the audience because that does a couple of things. For those in the financial markets, we then now have a window into the CFTC's mindset. We understand how the CFTC operates. We understand what they'll be looking for, and many of the firms now participating at the institutional level are prepared to deal with that level of oversight. So I think in some way, I take a bit of a sanguine approach to it. There's a bit of comfort knowing that there is not going to be a new regulatory body, for example. There's not going to be a new series of burdensome regulations. It will very much align with how we know the CFTC tends to operate. I think the other interesting thing about it, Pete, and I throw this out there, and it's probably worth talking about with a wider audience later on, I was actually struck by how some of the news outlets reported it. Having been there, in person, and seeing the reactions and speaking to CEOs of various Bitcoin exchanges and Bitcoin venues, some of the news outlets reported an interesting statement saying that the CFTC might see some resistance from Bitcoin exchanges who may not want to cooperate. That's an interesting take in my mind because that is not how any of the professional level Bitcoin exchanges that I work closely with and I know well operate. That is not their perspective at all. itBit certainly, CoinSetter may operate in a very professional realm, so the idea that some of those wouldn't cooperate with the CFTC struck me as a bit of sensationalism more than actual reporting of the current status.
Right. Yeah, I think in general in the world of regulation, yeah, you can hear me?
Still with us?
Hi. Yeah, great.
Yes.
Yeah, I think in general in the world of regulation, you're kind of getting regulation in Bitcoin. You're kind of getting a lot of the newer players coming in who don't really have a great Wall Street background, coming at from more of a technology world, not really understanding the regulatory landscape as it might play out and the different players involved. And whereas I think those companies like CoinSetter, like itBit, TeraExchange, who, if you like, have grown up with Wall Street or got people involved who understand the financial markets, this is kind of sort of pretty much just the way it's going to be, and there's much less concern. There's clearly going to be concern over regulation, how it plays out, and what it means, what it requires. But I think the view from inside, if you like, is a lot sort of more relaxed than it is in the broader world.
Yeah, and I've said this phrase before, and you've certainly heard me say this to clients and to the wider marketplace. If you're not prepared for some level of regulatory oversight, and at least not prepared to be able to deal with that, then you're probably playing in the wrong sandbox.
Right. Okay. Good. Well, I think we've sort of covered some of the news. I'm aware that time's moving on, and I do want to move on to our main feature. Been a couple of comments about the news already, and we'll try and get to those a bit later. But I want to bring in Bobby and Christian. Ron's going to stay with us for the main panel. But it'd be good to get some introductions from Bobby and Christian, starting with you, Bobby.
Okay, perfect, Pete. Thank you for having me. So my name is Bobby Cho. I'm the Director of Business Development at itBit, and itBit is a growing global Bitcoin exchange headquartered here in New York, with offices here in New York, Singapore, and also an office in Shanghai. And previously, before I joined itBit in April of this year, I'd spent the past 6 years at a broker-dealer here in New York called Second Market. For the past 6 years, I have been working on trading different types of liquid asset-backed securities, and then most recently helping to start the OTC and what I believe to be the first ever regulated trading desk for Bitcoin, institutional trading desk for Bitcoin out of a broker-dealer. And so that's kind of what I've been focused on most recently.
Great. So clearly got credentials to be on this panel. Christian, a quick intro from you too, please. And is Christian there? I'm seeing him on the call.
Mr. Christian might be on mute.
I'm just checking and making sure everyone can hear me.
Good.
We can hear you.
Thanks, guys. Thanks, Pete. So TeraExchange, this is an interesting. I see the topic of the discussion bringing Bitcoin to Wall Street, and in our case, really frankly, TeraExchange had no choice but to really bring Wall Street to Bitcoin as it relates to our background. So we are already a CFTC regulated exchange. We have been for the better part of 14 months. We worked with the CFTC the better part of the last 9 months to end up with a regulated Bitcoin derivative product. It is akin to a non-deliverable forward. We've really just gotten going in terms of opening the marketplace. One of the things we had to tackle and address was the CFTC's concern around the marketplace being susceptible to manipulation. And we had to go to work to create an index that really is an amalgamation of various underlying Bitcoin exchanges, Bobby's exchange being one of them. So we end up with an index that our instrument is cash settled against, and we're just getting going in terms of getting the marketplace at the critical mass we need, and we're excited about the opportunity. One of the things that I was on the Bloomberg panel last week in San Francisco about Bitcoin, and it was a similar, less regulatory focus, but similar panel in San Francisco, and it is fascinating to see more and more folks from the traditional capital market sphere entering the Bitcoin space, and I think that's a great topic to talk about as we move through this conference.
Great. Well, we'll begin to get going with some questions then. And I think the first one I've got to throw out to the panel is really to really help a lot of the people who are participants today working for Wall Street firms, understand mainstream markets, want to, hearing about Bitcoin. What can we tell them about, about Bitcoin trading and how similar or how different it is to the world that they know and love? Who wants to take that one first?
Yeah, I'll jump in here. This is Bobby from itBit. In terms of Bitcoin trading, it is, as it relates to other types of asset classes or traditional financial products get traded, it is very different in terms of that there are no natural safeguards that you see in traditional financial markets. So there are no real SROs out there. Look, there are companies out there, they're not abiding by certain rules that you would be subject to if you were either a broker-dealer or some sort of entity, right? And so just to give you an example of that, there are exchanges out there that offer margin or offer leverage to essentially people who are not qualified investors or have the technological skill set to understand it, such as Reg T and things like that. And so the landscape for trading Bitcoin is very different because it is like the Wild West, and a lot of people use that terminology to describe it because there is essentially no concrete regulation around it. The compliance around trading Bitcoin is non-existent, and even for our exchange, a lot of people don't understand that when people come to trade on itBit, that really itBit is three things in one company. We are the New York Stock Exchange, which is the trading engine. We are the custodian, which is basically Bank of New York or State Street. And look, we are also the clearing agent. We are the DTCC. And so we hope to, and I think the industry will get to a point where it's kind of in line with traditional financial markets, but at this point, it's just very unclear. A lot of that is tied to regulation and the uncertainty in terms of what rules and regs you need to follow by.
Okay.
And just to kind of add to Bobby's comment, Pete, I suspect, something Bobby and I have spoken about many times, the framework to do some of the trading is only now beginning to evolve, and I mean trading in the classical institutional sense. So there's no centralized price discovery. There's no sort of analytics or tools. They are beginning to come, particularly through firms like TeraExchange, through firms like itBit. But the framework to do institutional level activity is only now being built out, and I suspect that will build out relatively rapidly.
I agree with that, Ron. Basically, just to go back to our exchange, essentially you have folks, and this was me in my former seat in terms of trading large amounts of Bitcoin at any given day or any given week. Look, we tried to close out positions when trading Bitcoin on these exchanges, meaning we would actually withdraw all of our fiat, all of our holdings, because would we have been surprised if tomorrow we wake up and essentially the exchange is no longer live or has kind of disappeared? No, we weren't. And going back to how different is it from traditional financial markets, you would never, in normal circumstances, go to TD Ameritrade or Charles Schwab and ask for the physical certificates of your stock or withdraw your cash every single day because you're not trading in it. So that's just one analogy in terms of the differences in terms of whether it's understanding how these exchanges work and also just a difference between deposits and withdrawals.
Yeah, and so guys, and this is Christian, we hear a lot about the network effect of Bitcoin on the commercial side. As more and more merchants accept it, it just benefits the very first one that ever did. I think that analogy is probably useful as it relates to trading Bitcoin. So the network effect of trading the underlying spot product on an itBit would be complemented by a derivatives product, which of course that's what TeraExchange focuses on. This is not a commercial about TeraExchange, but generally speaking, for options and futures and forwards and swaps, et cetera, it gives that network effect to the trading of Bitcoin, which is really another way of saying the maturing of trading of Bitcoin. It's what we're living through in real time.
Okay, so we are getting a few comments and questions coming in, and certainly encourage some more. We're going to probably wait until the end of this to address them, unless it's one that sort of strikes sort of completely at an individual question. But I want to move on with a couple of questions now, just to get sort of further scene setting. I'd like to hear from each of you what you feel is the current, if you like, state of the institutional interest and engagement in Bitcoin trading, and what would it take to actually boost that engagement? So essentially what I'm asking is, how real is it that Bitcoin is being looked at by traditional Wall Street players? Who wants to take that one first? Should we start with you, Christian, on that one?
Sure. So, and my background is I was 25 years at Merrill Lynch and Bank of America, and the only reason I bring that up, aside from probably having earned some stripes for the pain, is because there's the dirty little secret here, or the elephant in the room, depending on how you want to say it, is these regulated institutions, the banks and the bulge brackets, can only trade in regulated products on regulated venues. So while they might have an interest, they might want to perform some analysis, they might want to see where Bitcoin can be used in commerce, or companies that are using it for IPO purposes and investment banking. The actual trading of it it's a non-starter until we can get regulation down to the spot level. I mean, again, we are regulated for the forward product at TeraExchange, and we've only had our first one or two conversations with banks about price discovery or hedging purposes or outright trading. That's new, right? So most of our outreach up until we got regulated was to the Bitcoin incumbent players, whether they be capital markets style with trading and hedge funds, or payment processors or miners or merchants. That was our first wave of outreach. But now, in a regulated state, we feel in good faith we can go have conversations with the regulated entities that may or may not trade it, but at least now they can contemplate it.
Right. And to Christian's point, it kind of parallels, Pete, some of the many conversations I've had over the past year. A year ago, my conversations with clients and prospects and other participants in the field was, to the extent we'd even be interested in participating in the world of Bitcoin, Ron, it's probably too risky. There were the usual statements about things like Ponzi scheme, or the lack of understanding about what Bitcoin properly is. That conversation, that dialogue has shifted significantly. Now a lot of the conversations with my customers and in the industry are, what's the risk of us not participating in the long term? And it's Christian's point about regulation and all of which will be required, and the standardization of how some of this trading and operations work will need to be solved. And now the conversation shifted to educate us about how we get involved and what's the best way to do that. And that's why tools are important. The things that trade on TeraExchange, the tools that itBit and other exchanges are making available, fills out that framework, and that's what's changing the dialogues for the better.
And this is Bobby. So I agree with everything that was mentioned before me. I would say institutional interest is high. I would say that engagement in Bitcoin is also high as well. Would I say that any of these banks or all these broker-dealers trading Bitcoin? Absolutely not. There's a few things that are against it, right? The biggest thing is regulation, exactly what was mentioned before. And along with that, you're talking about a market cap of about $5 billion. That's essentially the market cap of one stock, let's say Rite Aid or so. And so the issue that you have here is that how many resources do you apply to something that is unregulated, but also you see has a bright future, but at the same time is essentially a very small market at this given time. So in terms of what will boost engagement, and I think you're seeing it right now, in terms of whether it's information that's readily available online, in terms of what's happened in the media, and Ron mentioned this before, the conversation has gone from this is a Ponzi scheme to this is a currency to now, well, actually, maybe the real value here in terms of Bitcoin is the underlying technology, which I think all the enthusiasts over the past few years have been trying to kind of hammer home, but it's very difficult to understand. It took me essentially 8 months just to understand Bitcoin, coming from a traditional financial services background, and then diving into this kind of new age technology, because it's not how I used to look at things, at least. And so I would say the conversation is now, well, how can blockchain technology empower other assets, other industries? And I do feel like it's going to touch one way, shape, or form every single industry out there within the next 10 years. And so I think boosting engagement is just getting the story right in terms of what Bitcoin is and exactly what Bitcoin is not.
And that highlights an important aspect. I think the umbrella aspect of all of this, just real quickly, Pete, is the education curve. And I think some folks have mentioned it in some of their questions or comments on the online chat. The education curve is what we can do to mount as well, both from the perspective of financial services firms and regulators. I mean, bluntly, I was on a call with the CFTC this morning. I've spoken to various regulators over the past year, and all of them are resource constrained, certainly. But understanding what Bitcoin is and what that means for the wider marketplace is still a challenge.
Okay, so it sounds like it's something that, from what I'm hearing, it's very real, but there's certainly a need for a lot more education, and we understand that regulatory issues is going to be one of the key, if you like, aspects to be concerned about as we move forward. So, indeed, we'll be chatting a bit more about regulation in a few minutes' time, but wanted to also touch on some other areas which, from what I hear, certainly areas of interest to the Wall Street financial markets community when it comes to Bitcoin. First one is this topic of volatility. We hear, in fact, anyone who follows the Bitcoin markets and the price of Bitcoin knows it's a very volatile asset indeed. So maybe it'd be good to hear from each of you your thoughts on ways on whether that's a real concern amongst the marketplace, and what ways are there to manage it, reduce it? Is it just simply a function of that low liquidity? Let's start with you, Bobby, on that, and then we'll carry on with maybe Christian and Ron.
Yeah, not a problem at all. I would say it depends on how you look at it, right? Because some people love volatility, right? If you're a market maker and you're looking to make markets and arbitrage and do different things on different exchanges, you love the volatility. But if you are, let's call it a speculator or a long-term holder, or someone looking at the space, it can detract you from wanting to get involved, simply because the price can move at any given time for any given reason. And also what you're fighting against it's a globally traded product that runs 24 hours a day, 7 days a week, right? So even currencies close, I think it's a day and a half, so it's open 24 hours a day, 5.5 days a week, whereas Bitcoin continues to trade. And so what you have there is you have a market that's open 24 hours a day, 7 days a week, yet it is still funded by traditional banking means that are only open 5 days a week. And so then that ties into liquidity, where liquidity does dry up on the weekends because either all of the users have used the cash on the exchanges and can't get any more into the exchanges, which would even drive more volatility on the weekends simply because there's not enough liquidity on the exchanges to support the trading that is essentially happening. So I would say, in terms of how to reduce it or how to manage it, I think that when you have more and more players come into the Bitcoin market, whether these are marginal buyers or marginal traders, you should start to see that teeter out a little bit. also, as more and more Bitcoins get produced and essentially released to the public, the supply increases, and that should also help as well. And so hopefully that kind of answers your question, Pete.
Okay, Christian?
Right. So thanks, and thanks, Bobby. So, we look at this in a couple different ways, and when at the beginning of the year, when we decided to dedicate resources to creating the product, we use gold as a proxy, and for all the gold that's traded every day, less than 1% of that volume is actually gold used as commerce. So when you think of all the different ways gold can trade, whether it's options or ETFs or ETNs or futures, that's a much bigger multiple of the underlying use of gold. And knowing right now that the base case for Bitcoin, it's prohibiting, maybe it's exciting or prohibiting traders to come into Bitcoin, but it's certainly giving merchants pause to adopt Bitcoin as a means of commerce, and so we're left with a friction, right? There's commerce that might actually stabilize Bitcoin if more commerce was being involved, but there's more volatility, which might attract more traders. So we're left with, frankly, the same thing that gave birth to credit default swaps or interest rate swaps, is the need to hedge that risk, whether you're a passive trader or a merchant looking to get out of, focus on your core business of whatever your franchise value is and leave the FX volatility to the professionals. And I think reducing or managing volatility is essential to giving birth to products that can do that. Again, so we're talking about the mushroom effect of derivatives on top of the underlying, which I think will embolden both the merchant and the trader to be able to manage their risk or eliminate their risk as they see fit.
Yeah, I tend to agree, Pete, with both Christian and Bobby. I think growing liquidity plus the derived tool set that allows participants in the marketplace to mitigate risk and volatility. So, for example, we recently launched and partnered with some colleagues a version of a Bitcoin volatility index. There will be others, I'm sure, across the marketplaces. But to the extent that tools are available to different stakeholders operating in the chain of value that represents Bitcoin trading, that will tend to smooth out the volatility over time.
Okay.
Yeah, and I just wanted to, this is Bobby, I just want to jump in really quickly. Christian had mentioned something with regards to, and I think this is where we might differ a little bit, is that merchants are staying away from Bitcoin or adopting Bitcoin as a payment mechanism for their consumers because of the volatility in the market. And in my opinion, I don't think that's 100% accurate, just because a lot of these merchants, they actually never touch Bitcoin. They actually never see Bitcoin. And so they have payment processors on the back end that are actually taking on the risk of the volatility. And that's what these companies are designed to do. And in turn, in 24 hours or shorter, the actual merchant is receiving cash on the back end. So the merchants actually don't touch any Bitcoin, at least some of the larger ones out there, right? Like we're talking about the Dells, the Expedias, the Overstocks of the world. But that's just one note that I just wanted to lay out there, that there are companies out there in the back end of these merchants that are actually taking on the risk on behalf of the merchants to make it easier for them to accept it.
And to that point, Bobby, I think it also talks about that education curve we mentioned earlier, right? I think there is a wide proportion of merchants who simply don't fully understand how the payment mechanism of Bitcoin can be incorporated into their business. And I think as solutions become available, that might the percentage of merchants doing that will increase over time.
Yeah, I completely agree with that. It's the fact that they don't know the chain of the cycle of the Bitcoin, right? All the way from mining to the point of when it's taken on by a merchant and then taken on by a payment processor, and then that payment processor is then in turn liquidating those to turn that into cash. And then it's really that whole cycle that people don't have a clear picture on, and essentially you wouldn't unless you're in the industry. But obviously that's why we're here to help out as best as possible.
Yep.
Okay, so it sounds as though, from what you're saying, is that there's quite a bit happening in terms of tools, whether they be financial instruments or indices or whatever, or people taking the risk from the volatility for those who want to engage in the market. But certainly still seems to be a talking point in the market. So, and as you rightly say, Bobby, it's a way that some people can make a lot of money. So, want to move on and discuss maybe briefly, the subjects of platforms, because I think again a lot of people on this call are used to working with the kind of technology in traditional trading, perhaps in some of the sort of high frequency trading markets or arbitrage, where latency is an issue. We know that security is often being brought up with regards to Bitcoin. We know there's some movement happening in terms of different APIs and the fixed protocol coming into Bitcoin. So it'd be good just to get your ideas from on what you are hearing from customers, potential customers, about what they want in terms of trading platforms and whether or not those needs are being met now. Start with you, Bobby, on that. We'll take Bobby and Christian and Ron again, I think, in that order.
What fix, which we will have the capability within about 3 weeks now. APIs obviously are an important thing as it relates to people plugging in via their own front end. Transparency, I think the Bitcoin market is actually more transparent in terms of the data, and Ron can actually probably add to this, but in terms of the data that is publicly available to anybody that wants to know, in terms of the hash rates that people mine against, in terms of, trading volume, trading pricing. And if you think about it, it's more transparent than traditional financial services, because every single trade that occurs on our exchange gets reported, and it gets reported not to a regulatory body, but to all these public websites that can track exactly, one, how much volume you're doing, the average price on any given day, the average amount of volume you're doing, and you can track it against other exchanges as well. So I would say transparency from the exchange standpoint is definitely there. And in terms of, I still think we're very early, right? I still think we're very, very early in terms of Wall Street firms asking for very particular things as it relates to trading platforms. The bottom line is that there is no common ground between any of these exchanges in the space that say, okay, well, we actually have, and I'll just give you one example, right, is AML KYC is obviously very important, and it's one of the founding principles of itBit, but there is no one system compliance onboarding program that people go through, much like people do when they sign up for a brokerage account. Every exchange is different. Every exchange asks for different material. Some don't ask for anything. And so it goes back to the whole point that this is the Wild West, and things are still getting built up. So I don't think we're necessarily at the point where Wall Street firms are asking for very minute or finer detailed items from exchanges yet.
Right, and so TeraExchange, we come at this again from our legacy background. I mean, we have a full toolkit for folks. We have always been and only are a fixed shop. We have a great front end and great technology, charting packages, rules-based packages, algos, indicators, functions. We come at this from, again, we're all legacy street folks here. And there isn't anything out there that we know of in terms of trading protocols that we don't present to our end users on day one. Having said that, it's not just about the legacy toolbox so much as it is about the architecture of your market. It's a point of fact for us that we are never involved. TeraExchange commits no balance sheet. We are never the other side of any trade. We are, I think Bobby mentioned earlier, the New York Stock Exchange analogy. We bring buyers and sellers together for price discovery and let them execute through a variety of different protocols, and that's our job, and we do it in a transparent and regulated way. We're reporting requirements for us. We have to report to the CFTC, and then we are our own SRO, as every exchange is, but we use the NFA as an outsourced CFO type, and so we have the reporting for us has multiple levels. It's not just the consumer level, but also on the regulatory side. And when it comes to what's important, we're learning that is very important.
Yeah, I agree. And just to kind of wrap this point of it up, as a financial technology company, what's very important to DCL is the idea of platform capabilities, and more importantly, integrating in the workflows of how institutions and financial services firms operate in the world today. So when you're looking at things like latency in the Bitcoin world is a very different thing than latency in cash equities, for example. High-frequency trading, very relative, very different thing in the Bitcoin world than it is in equities and options, for example. So the importance of platforms and the importance of technology, and for some of the tools we put out there for our clients are very geared to connecting up how they do business now with the new marketplaces of what digital currencies should be. FIX is part of that. Analytics are part of that. Liquidity discovery is part of that. So all of the capabilities that a TeraExchange or an itBit or some other providers are offering, the ability to integrate that into the workflow of financial services firms as they operate now, I think is an important part of adoption.
Okay. I'm mindful that time is moving on. I do want to take a few minutes to chat about the world of regulation, since it does appear to be sort of a key enabler, if you like, to this world of Bitcoin trading really taking off. So I'd be interested to know from all of you, in terms of regulation, what you think is, if you like, the state of the art in terms of what's needed, and maybe some concerns about what might be too much. There was one comment from the audience that I'll slightly rephrase into, do the regulators actually understand Bitcoin? So it'd be good to get your opinions on that. Let's start with you, Ron, and then we'll bring in Bobby and Christian.
Sure. So, to the audience member's point, I think the knowledge level of regulators, the CFTC, New York DFS, FinCEN, is improved from what it was several months ago. I think they are all overworked and understaffed in many regards, so the effort required to understand Bitcoin and blockchain technology and how execution venues like itBit and how platforms like mine and the derivative instruments, the things that trade at Terra, for example, how they operate is still part of what the regulators need to understand. I suspect that a lot of the industry is waiting for clarity in the regulatory perspective. So we talked about the CFTC saying that they have oversight, which is fair. I do think that final publication by DFS, although I have certain issues with the DFS documentation, I think final publication will help put some clarity to the industry, and then it gives them a footing from which to move forward. So that's kind of my take on the regulatory framework. I think that will happen relatively quickly, and I think once that happens, you'll start to see larger scale interest simply because they know what's at risk of not complying.
Yeah, and I'll jump here. This is Bobby. I would say that I've been extremely surprised at how quickly the regulators, not saying that they act slowly, but how quickly they've responded to the Bitcoin community as it relates to whether it's tax guidance or other aspects that you need in terms of whether you're a money service business, whether you need to apply for money transmission licenses. I've been pleasantly surprised at how quickly they've reacted to this. Almost every single department from the federal to the state level is or has some sort of Bitcoin task force, and which is prudent on their part as well. And so here in New York, obviously the big question mark is the BIT license. What will entail? How overbearing will it be? I fully anticipate the bit license to make way for other states once it's public, for other states to simply white label it and create their own bit license off of it. Because if you think about it, states outside, and not to be ignorant here at all, but states outside of New York, Texas, and California, you just don't have as many Bitcoin companies trying to either get incorporated there or understand how to live in the regulatory environment outside of those states. So if you're a state like Maine or somewhere else, they'll just say, okay, well, we'll just adopt the bit license that New York has put out. And so it's a huge overhang right now in the industry. But I think that, look, the bottom line is, if you act like a bank, if you do bank-like type services, or if you act like a financial services company, they're going to treat you like a financial services company. So whether that's if you are an exchange or you're someone that handles money, well, you need to have capital reserve ratios against it. Or you're providing other services, you're going to get held to the highest standards possible, because simply you just can't have people starting exchanges with two guys that have no understanding of compliance or regulation, or how to even understand that, because the game is different. When you start taking customer funds, you become liable from the consumer standpoint.
Great. And so this is Christian. I'll just follow up real quickly. The question here is what's needed, and maybe it's easier for me to say what was needed for us to go through the process. And if I could walk people through that for a minute, I think it would be interesting to everybody. So again, we already were a regulated exchange by the CFTC. We approached them in January or February, which for those folks with better recall than me, they can remember those were volatile days in the Bitcoin space, and every headline seemed to be negative. And at the end of the day, we as an exchange are governed by core principles that the CFTC holds every exchange to. And the biggest and most important one, and I mentioned it earlier, is that our products, nor the underlying products, in their estimation, are susceptible to manipulation. And granted, there's been many instances of many other products that have been manipulated, and those have been uncovered, and it will always be uncovered at some point. However, the test is readily susceptible to manipulation. Is the exchange making best efforts, and can they demonstrate and defend the product not being susceptible to manipulation? And again, I mentioned this earlier, we had to go build an index that is basically has the input of multiple global Bitcoin exchanges, and the output of it is fair value of US dollar-based Bitcoin. One of the important parts of that index and of the participation of the underlying underlying exchanges is something called an information sharing agreement. So in place, TeraExchange and itBit we have an information sharing agreement between the two exchanges. And if the CFTC comes to us, or we ourselves suspect somebody is trying to manipulate our product or manipulate the underlying product to affect our product, we have these information sharing agreements in place which allow us to go query the exchange, and it's reciprocal. It can go both ways. So it's really the first version of the CFTC having a very light touch of regulation all the way down to the underlying exchange. It's not explicit, it's implicit, but I thought it would be good to share that with everybody because it was critical for us to get through the looking glass with the CFTC, and B, there is the beginnings of, and more, I think we're past the beginnings of substantial framework and bookends for fairness. So that was what was needed. I don't think it was too much to ask, because that's the second part of the regulatory question here. I think it was actually quite fair, and any common sense businessman would agree.
Okay, thanks for that, Christian. Because there are certainly a number of examples out there of indices in the Bitcoin market. I know the effort you've put into your index. Obviously, you're using as the basis for trading has been certainly a more, if you like, robust approach. And it's good to know that how that evolved in terms of you working with the regulators. So I think we're getting almost to the end of this show. I know a few questions have come in. Looking through the chat room, I think in a large part, with maybe sort of one exception, they've really been answered by the panelists during the debate. If there's any questions that have not been answered, I will make sure they get put out to the panelists to get an answer specifically. But perhaps we could just then wrap up with one simple single question. 2015, which is not far away at all, is that going to be the year when Bitcoin is brought to Wall Street? I'd love very firm, definite answers to that. Who's going to go?
Yes, it's Ron speaking. I think 2015 will be will be looked back in history as one of the hallmark years where we get clarity on regulation, we get clarity on the impact of that regulation to the growth of the industry. I can throw my hat in and say that I predict maybe not a large money center bank, but certainly a large regional will try in some way to get involved. I think Arthur Levitt mirrored that in some commentary on Monday as well. So I think 2015 is going to be a very good year.
Okay.
This is Bobby. I will say, yeah, it will be a big year for Bitcoin as it relates to Wall Street, but it will not be the year as it relates to Bitcoin coming to Wall Street. I will say that actual catalytic event, to call it, I think we will actually probably see that in 3 to 4 years down the line. Because if you are talking about Bitcoin, the trading of it, then possibly it's next year. But the actual utility of Bitcoin, blockchain technology, side chains, and all these other things that people are coming out with that will enable other types of asset classes and industries to get touched, I think that will be the catalyst, and that's 3 to 4 year time horizon.
Okay.
Sure, and so we talk to the bulge bracket banks and have for years in our legacy product set, and as we can all read in the headlines, they are preoccupied with many other items. Bringing on an unregulated product set to trade at the spot level, I think is going to be difficult to imagine in 2015. What I do believe will happen is as more and more merchants and payment processors get involved in the space, to the degree that they need ancillary services, whether they be accounting or consulting, I can see that taking hold very quickly. And then I think what's most obvious is the investment banking side of the banks. As companies that are deemed Bitcoin companies, whether they're service providers, utility layers, or otherwise, as the industry grows and matures, there'll be acquisitions and mergers. And if there's an investment banking dollar to be made, you can bet your biggest bulge bracket bank will be right there.
Great. That's a great way to, I think, end the panel. So thank you to everyone for participating on the panel. Thank you for everyone for listening in. Probably had only a couple of people drop off towards the end, so even though it did overrun a bit, I think wasn't too onerous in terms of keeping your attention. By way of wrapping up, planning to have the next episode in January. We're thinking about the focus will be on regulation and regulatory matters and compliance matters, because I think an awful lot has been talked about today, and I think we can probably devote a whole show to that. But very much interested to get your feedback on other topics to be addressed. So, is it volatility? Is it platforms? Is it technologies beyond Bitcoin, the currency? It really is your opportunity to try and guide what this show is about. So please provide feedback, which you can do either as soon as this ends, there'll be a screen come up with an opportunity to type some comments in, or you can email me at my email address, p@cryptomarketstech.com. As I say, there'll be a replay of this show put up on the website, hopefully in about within 24 hours, and that'll be another way, and we'll send an email out to tell you that's happened. That'll be another way you can engage with this. Anything from me, happy to receive it. Anything you want passed on to the panelists, happy to do that. So with that, thank you everyone for attending. Thank you for the panelists for their time and for your great insights. See you again very early in the new year. Have a great holiday season. Thanks a lot.
Thank you, everyone.
Thank you, guys.
Thank you.
Cheers.
Thank you, Ron, Pete. Thank you.